Welcome to another edition here of Rolland Market Mashup. Here, first day of December, Tuesday, December 1st. And looks like we are heading for, yesterday was a bit choppy, a bit of a sell-off today. Dow futures are up a decent amount. Zoom had their earnings yesterday. They blew them out of the water, but they're naturally down a bit pre-market. I don't think that's shocking to anybody with how much they've run up. But in saying that, possibly a good buying opportunity in that. We'll see what everyone thinks of that one. There's some other, seems like Tesla and Exxon are making some moves this morning. My internet is kind of lagging, so I'm pulling up this stuff. But what do you guys think? We're in a new world of a crazy year here. Dad, do you have any comments on usually historically what happens in the beginning of a new month at the end of the calendar year, or is it just completely up and down?
I think we got to take historics and move it to another universe at this point. I don't think it means a lot to look at any other year. We're definitely in new territory. I mean, the end of the year is always thought of as a year-end rally, and losers go down and big gainers usually go higher. So we'll see if that continues, but who knows what's going to happen when you're dealing with what we've seen in the last few months. Where is Zoom trading? You just said
it's trading at 444.80, which is down 7%.
Not bad for a company that blew away earnings. It just shows you how well these stocks have to do to continue on the road of complete bliss. And
so how
Zoom
do
is
you,
in that category.
How do you interpret their numbers, like in terms of a sell-off like this? Do you see that just being healthy for their stock, or are you looking at this as a sign of bad things to come for them?
No, I mean, look, they had phenomenal numbers. And
Credit Suisse raised their price target to 340 from 315.
Yeah, I mean, that's the reality. The stock price is not equivalent to the company.
Morgan Stanley raised it to 380 from 350.
And then,
so like, what's up?
Well, yeah, I guess that when you think about any stock, as we've seen over the years, when it runs up a ton, earnings, unless they're terrible, are not going to really do much. You know, obviously it's going to dip regardless. If they're terrible, they'll really shit the bed. But it seemed like there was no way of Zoom going up after earnings yesterday when you really break it down.
Full year 21 revenue guidance of $2.5 billion. What's their market cap? It's actually not bad.
Yeah, the market cap's not terrible. I mean, it's just a matter of being way ahead of the game.
Talking about way ahead of the game, Tesla, which it seems like the car makers still haven't been able to figure out how to legit compete with them. They're up a good amount this morning off of just the news of how they're going to be added to the S&P 500, which I don't know what that really means, but it seems like people are more bullish on them with the way that's being broken down. It seems they're being added in 3 weeks to the S&P. Do you think that helps at all? Like when we talk about an end of the year rally, do you think that could be a catalyst for it?
Well, I mean, it's not new news. I think Tesla is in the same category as some of these other high flyers like we were talking about yesterday, where it seems like any stock that's in its all-time high range is pushing higher. And Tesla seems to be leading the charge. And if you really think back to all the chaos that was going on in February, March, April, when the market had that vicious rebound, Tesla was the one that was acting so ridiculous for so long, where everyone kept thinking it was so overdone and just kept going. So it almost just feels like we're right back to where we were post-pandemic when the market had that insane rally before its first correction. And you have the names that got us here that just continue to go higher. Like, you know, yesterday, I know we weren't on here during the show, and in the morning we were talking about it a little, but if you looked at like AMD, for example, that stock hit all-time highs. Square, Tesla was over 600. Anything that's in its all-time high range is going higher. And, Kramer called that out, and it seems like at the moment, at least, he was right. And one of the things
what do you think, man, with that, like a Walmart, for example, when we think about a stock that obviously e-commerce, the lockdown happening again, they're at all-time highs. Do you look at a stock like that could run up a bit more here heading into the end of the year when you look at that combination, you would think it's a huge win for a Walmart.
It feels like the kind of market, and this is always when it's probably a good idea to make sales, where anything you buy is going to be up within a couple of days and you could sell it. And I'm not saying that's actually what's going to happen. That's how it's felt lately. And it's not necessarily the best thing. I will say a stock that we randomly talk about on here that's back on my radar. I've owned them throughout the pandemic, but I'm thinking about buying a lot more, is Take-Two, ticker TTWO. Mike, I know you own Activision. I own Take-Two. They just closed at their all-time highs yesterday. And in this type of market, I'm all about buying higher and selling higher, buying high and selling higher. And if you look at Take-Two, it's kind of made the full it hit the same highs in August, and it kind of had this little period of trying to figure out its price discovery, touched down to 150 several times, and then crept its way back up to 180, which is where it hit in early August, and then closed above its recent all-time highs yesterday for the first time. So like this chart to me looks prime for a breakout. Take-Two right here.
I like where your head's at, Dan. I mean, I might even jump on a little Take-Two. It's funny. I know Mark Roberts on that Trader Show yesterday was bringing up Activision as a great holding right now, going back into this whole uptick in cases. That's been acting better. So for our viewers, I think that sector is definitely something to keep your eye on here as a good entry point. Take-Two, I've never owned. I might grab some today. I'm considering adding to my Activision position because it's been acting way better as of late. I've been a long-term holder of that. It was kind of a dud during the heart of the pandemic, which was kind of shocking to me. And great call on Apple yesterday. I loaded up more. You want to touch on your thoughts on why you think that's going higher here?
Well, first, we're looking at the Take-Two chart, and it definitely looks better than Activision for now. It's just a better looking chart.
And the reason is just it broke through these levels, and Activision hasn't. It still has got to get through.
It'll be an easier ride for Take-Two.
Maybe I'll just dump my Activision. I'm down a little on it and jump into Take-Two.
Apple 120 yesterday was an interesting level, and the next level is 125.
Yeah, it's. I think the momentum alone may take Apple to its old high shortly, as long as some doesn't hit in the road here. But Apple is one that everyone adds to when money's coming in. So we'll see.
What do you think? We were yesterday, to touch on this whole lockdown thing. We were out hunting for propane for an hour, where Dad and I were talking. Every restaurant known to man has a outdoor heater. They're having a crank with propane. People eating outside with the fires, with the being winter. Do you guys look at that at all as having any hindrance or help to oil and gas? Do you think there's any correlation there?
I don't know. I think it's a minor part of the oil industry, if you want to look at the whole industry. And I don't even know which companies benefit from propane sales. It's probably more the retailer than the companies that produce the propane.
But how about oil, like a oil and gas type of stock? Do you think this is? I know they got hit again yesterday.
Well, they're back up today. I mean, that was like a one-day, okay, time to make a sell, and it looks like they're back on track, at least short term here.
It seems like oil.
You don't like oil, like in terms of, do you think this could be a good entry point, or do you still think, Dan, I know you were saying you still haven't even gotten out of your position with that. Do you think those have more downside here, or is there enough? Is it limited where it's worth jumping in?
I personally think they have a lot more upside here than downside. And I mean, Dad.
Yeah, I agree with that. I think I took, I have some mutual funds, and I took away my energy quite some time ago, and I put in a 5%, total for energy now, which isn't a big amount, but it puts me back in to an energy mutual fund. So I think people are under-owned in energy big time.
So what would be the stock you would suggest for the, to make an entry point?
Well, I think
at a small
Chevron is always the one I look at as being one of the gorillas in the space. So that would be one. And, we always talk about BP. I think there's pretty good upside from these levels, but it's hard to keep looking at BP because that was such a bad one for all of us over the last few years. But they may be turning the corner, and they have a big green energy theme to what they do now. So that could play into the next administration a little bit. Not that that's going to make them profits. GameStop.
No, he said bank stocks.
Oh, bank stocks.
Yeah.
Yeah, I mean, we talked about bank stocks, and I think they're okay now. They've gone from being totally out of favor, and now people are coming around to them. But they are going to.
I mean, what do you guys think heading into the new year with banks? Which banks are going to be the winners here? Like, my only fear with that is this whole, pandemic. We still have a while to go. Are they going to be pressured like we saw back in the spring, in the beginning of all this, with the whole credit risk? And are you guys worried about them just being laggards here for most of the next year? Or do you think they've been beaten up?
Other than my mutual funds, I don't currently own any banks, but the ones I've been following are the ones that aren't like the regular banks, but the ones that have like a big investment trading department too. So like I've been looking at Morgan Stanley and Goldman Sachs as ones that if I'm going to play a bank, I'd probably rather play those than JP Morgan. But I don't know. I kind of look at it like we're not going to see an increase in interest rates. And that probably isn't great for the banks. It seems like this move is a little overdone. I personally have other places I'm looking that are not banks.
Yeah. But the one thing to think of, like with a Goldman Sachs, is they're involved in all of these IPOs, secondaries. They're making money on the trading desk in ways that the rest of us don't have an advantage like they do. So they're going to continue to have phenomenal numbers as long as the market's hot. So they should really kill their earnings again. JP Morgan is great to buy when the market's in a debacle. When things are really hitting the fan. I love to have an order out there for JP Morgan because those are the kind of names they go. So is that something
you're keeping an eye on if we get some sort of pullback here before an end of the year rally? That would be a good buying point for JPM.
Well, I'm not even talking about pullback. I'm talking about a massive sell-off, and that's when you look at those kind of names. To add to it. If you own those stocks, you wait for those kind of situations where it's massive sell-off.
Like where it hurts.
Yeah, it hurts so bad you don't want to buy anything. And then a JP Morgan will do you well, and any of the blue chips would. But that would be one that would be.
I think we got to talk about Bitcoin and gold for a second here because obviously we've been talking about Bitcoin a lot with the recent moves it's had. It kind of has been flushing out this morning after just ignoring that recent flush out that it had a few days ago over Thanksgiving. I don't know where it's at right now. I think it's down to like 18,000 after being at like close to 20,000 literally hours ago. So that's going to be an interesting thing to watch. And then you get
Dan, it's actually popped back up now to 18.7 as we're speaking. So this thing is
18.7 still though. It's kind of, it's all over the place right now. And then you all obviously have the crypto mining stocks, which are getting sold off a little bit. Mara, Riot, there's a few of them. But what's interesting to me and what I've been looking at is gold. because gold, it just seems like everybody's now just ignoring, saying it's time, it's done. And when you think about what was looking good when things were kind of uneasy during the pandemic, gold got the look before Bitcoin, and gold had its little double top and then got into its consolidation phase before Bitcoin did. And now it's kind of at this level where it hit its double top, it came down a little. And I think you're about to see gold be the trade, not Bitcoin. I know that's not a popular opinion. Everyone and their mother's talking about Bitcoin. No one's talking about gold. You know, you look at and obviously there's different ways to play it. I've been looking at the actual stock gold, GOLD, which is a gold, Barrick gold. And it just seems like it's at such a interesting level of, like, I mean, it actually came up yesterday. It was down and then ended up popping in the afternoon. And this morning it's up 3% pre-market. But if you look at this chart, I mean, I think this is a really good buy here. And I think it could work its way back up to 30. And then if it breaks through 30, like really, really take off. And I know the people who are bullish on gold think that it's really just getting started. And I think people are kind of impatient, and that's why gold is not a popular trade anymore, because it was and then wasn't for a few months. But, you know, Mike, when you look at the RSI, like a stock like GOLD gold, up until yesterday, it couldn't have been beaten more down. Like if there was ever a time to say, oh, okay, like if it's going to ever get a buyer to come in, it's right now. And it seems like it's happening.
Yeah, I agree with that.
What do you guys think? What has to happen for gold and Bitcoin to just both pop? Because when you think about it, everyone's talking about Bitcoin, but I'm just saying it doesn't mean gold can't go up and Bitcoin can't go up.
Well, it can. I think what might happen is you might just get a broad-based asset rally in December, if there's going to be like a rally, which we've seen in the past, where anything that's not the dollar just goes up. People just want to pile into stocks, gold, Bitcoin.
Exactly.
But where gold might get it, but where gold might be interesting is, you know, there's definitely a lot of data coming out that shows that people are pretty all in right now to the markets. The ratio of call buying versus puts is as high as it's ever been. The things that usually signal some sort of top. So you would think if the market does get real ugly, like it was starting to yesterday, even though it didn't yesterday, maybe people look at gold, because if the market's going to get ugly, it's because people are questioning these insanely high valuations across the board. And that's when they might look at gold.
I think,
by the way,
I think that's something. What's up, Dad?
No, what I was going to say is, if you're thinking of gold, the other thing to not forget about is silver, which is actually up hot, you know, more than gold in percentage terms.
Gold. Dad, what's a good way to play silver?
I'm actually just looking up 10 great silver stocks as we speak. And
I love where your head's at with the silver.
You know, it's just another way to play the same thing. And, you know, you could look up many different names. I'm not sure what the best one is. We're going to have to investigate that for now.
But either way, Dan, I think you're dead on. When you look at, and this is why I'm so bullish on Bitcoin too, when people are seeing, oh, okay, this market's running hot, we need to have an alternative for when a pullback comes. Naturally, the fact is, gold comes to mind, and Bitcoin's in that same conversation now. We've seen how many times people are like, oh, is this a safe asset? When shit hits the fan in the market, people go to gold. Well, that's the argument with the bullish versus bearish case of Bitcoin next few years. Is it going to continue to climb with market cap and get to that point of surpassing gold eventually? Now, right, naturally at the moment, it's nowhere near there, but that's been the ongoing balance beam with the Bitcoin gold conversation. And the fact that it's even a conversation, I think you can throw both of those in the mix. So I don't think necessarily it's a bad thing for Bitcoin when people are thinking, oh, where else can we put money here? Gold or Bitcoin?
Yeah, now a silver stock, just one we found, is MAG. You could take a look at that chart. looks interesting.
And
I think any of them you look at will look interesting.
can't you play an index that literally just mimics the price of silver?
Yeah, there's silver
Isn't
index.
it like SLV or something?
SLV is also the futures. Is that an index?
How do you? Yeah, no, you're right.
That's the future, actually. The best way to play these things is the futures.
SLV.
Yeah.
Silver's Trust. Yeah, SLV is a way to play silver for sure.
Mm-hmm.
That's
and I know, Chad, didn't you mention copper as something that, like with this infrastructure?
I pulled up the chart this morning, and it's it's explosive copper.
Yeah, and then copper is more related to the economy. Copper goes up when building, stocks go up and anything related to building. So
well, and that's when you have to ask yourself if there's a huge infrastructure bill coming in 2021, which you would hope something's going to come with that. Will that help with copper? When you think about building and construction, are they going to be a major winner here?
And when you think about what really, in general, caused silver and gold to get to these levels in the first place, it was the excessive stimulus. It was people losing confidence in the dollar. And while the market was booming and they were doing the stimulus, gold and silver were booming like crazy. And certain people were talking about it, a lot of people weren't. But silver and gold, I mean, these charts are identical, but you look at silver, they came down, and this 20, it obviously had a nice day yesterday, but the 2050 level, it hit it in September, and then it hit it again 2 days ago, and that's it. And it's like, that's the level. If it breaks 20 or even 2050, all bets are off. But right now it's like at the bottom of this range. And
SIL is another one, which is a silver miners ETF.
I think silver is going to double from here.
So it's another way to play into this market without playing stocks right now, which is probably.
And
not
guys,
a
another
bad
thing
idea.
to flip gears here, I wanted to bring up, because I think we brought this up on our show, that Salesforce acquired Slack, and it at first seemed bad for Slack. And either way, when I've looked into this more, Salesforce to me, I got in for a quick swing trade yesterday for a quick profit in and out, but I'm starting to more and more like these levels for a long-term hold. I'm curious to hear your thoughts on their chart with CRM, because they're off their all-time highs around 20% right now. And I think long-term that acquisition is great for them any way you spin it. And I with where we're heading with the cloud and what they've been up to throughout the last few months, I think Benioff has done a great job across the board throughout this whole crazy year with his culture and his team and what they're doing. What do you guys think of that as a anchor here?
I like it, Mike.
Yeah, I think I'm going to get back in that today.
On one end, it's gone on a hell of a run, and you can make the case that it can come all the way back to 200, but on the other end, it's a beast of a company. And you're right, they are way off of its highs. They had that day where they were up like 50% when they had the blowout earnings like 6 months ago. But this big gap up, and then
it seems like they've kind of been flying under the radar as of late, where it's just people are like, they're a dominant company, they ran up so much, and meanwhile it's like, okay, well, they're going to be running up way more with the moves they've made. I don't see what's stopping that trade at all.
Remember they were put into the Dow, and that created a lot of excitement around that. And now it's kind of spent, a couple of months trying to catch up. It's the same thing. These companies get ahead of themselves in the stock price and have to catch up to where the company is. And
it seems like they've caught up, right?
Well, it's interesting because when you look at this chart, and obviously the company and like the technicals of the chart are two different things, but it seems like it's either going to break up or break down, because it's been making lower highs, and for a little it was making lower lows, and it's kind of starting to form that wedge where something's got to give.
And this is where, it came into the Dow, right?
Yeah.
So it's still higher than those levels, but not by much.
Yeah, I mean, I think these levels were probably pretty good to pick some up when it got into like the 220 range, but it's it's tough because there's no doubt if the market wants to sell off, this is probably a stock that's going to get hit hard. So
Yeah, and Palantir's back on the upswing again. Where is that trading today?
27.75. So it's on the upswing, but you know, it got over 30, nothing crazy. Something that we've all been doing, which has been a really good strategy to kind of have insurance, is we've been selling calls against our positions to basically have some insurance to the downside. It limits the upside a little, but the calls are paying at such premiums that it doesn't limit it that much, because if the stocks are going to go up that much to be able to collect the premium in addition, it's pretty good stuff. So just to kind of give an example on like a move, you look at Palantir today. I already have the call options from when I did it last week, but if you own Palantir and you sell call options today for the beginning of January at basically the price of that right now, $28, I bet you could pick up $4 on that, which basically means that, you know, come January, if it's trading right where it's at now, you're selling it for $32, which is, you know, 15 to 20% gain above where it's at now. And if it goes down, you're at least insured up to $4. So that I've been doing it with most of my positions right now. And if the stock keeps going down, I'll close out the option when I'm down on it, so I could take the loss against the taxes and then reopen it at a higher premium. If the market flushes out, those will all hit and I'll collect the premiums, and at least I'll have insurance for a market flush out while still being exposed if the market wants to continue its rally. It seems like a great strategy right now, and I'm happy I'm doing it. It's been adding to the bottom line in a huge way in the last 2 months.
Yeah, any of these stocks that have been extremely volatile gives you a phenomenal opportunity to do exactly that, sell options against your position. And you could do a couple of things with it. You could sell the options for January, so there's no tax consequences for this year, or you could do it for two weeks from now and then cover those options right before strike day and then roll them over into a later month. So you could really move the positions to higher profitability by using these options.
Yeah, it's a great strategy. Like, for example, Uber today, it's looking like it's going to be, I mean, it's going to open up 55 cents, which is 1%, and it's a little over 50. And when you look at the run it's gone on, for it to be up today, you would think you can get a nice premium selling call options against a position if you already own Uber. And, you know, those are the types of things that could really make the bottom line add up. And since we have 2 minutes left, we're also not talking about, but we are going to, instead of doing this every day, we're going to do it twice a week. We're all starting to get more busy with our lives again. And we're going to do it Monday and Thursday. And I think we're going to do it in the early afternoon, so we could actually do it while the market's open. And then we could, you know, possibly do some trades while we're on the show. And we just think that it could be a little bit better doing this when the market's open. So we'll send out more information on our social media handles about what we're going to do time-wise, but we are going to be doing this twice a week instead of every single day. And we're going to be doing it when the market's open. So hopefully we could actually execute some trades on the show, which would be really cool.
I have a couple more stocks to bring up here for you guys.
Okay.
Before we get off, AMSF. I'm curious to hear your guys' thoughts on that. We haven't brought them up. AmeriSafe, which has fallen hard the last year if you look at it. It's an insurance company. So they insure employers in hazardous industries for underwriting, and it's basically something that seems like it's picking up some steam with analysts the last couple of weeks. With where we're heading in the world right now, they've gotten beaten down hard, and I'm reading there's been a few positive reports the last month that are popping up, and it seems like it could be back on the rise here soon. So that's something to keep an eye on, AMSF, as a possible discount. And the other
Yeah,
one's Lululemon, which I know we've brought up time and time again randomly on this show. I always just think of a company like that going into holiday season, e-commerce. I know their stock is crushing it, but I think they have some more room to run here. I haven't actually ever owned Lululemon, but I'm thinking about dabbling in both of those here this week.
Lululemon looks a lot more interesting as a chart. I mean, the other one just looks beaten down. Lululemon looks like it's going to rip to its old all-time highs.
Yeah, the other one might be one of those stocks that people get rid of losses for the end of the year.
I think that's already happened. When you look at what's going on,
it could be a good January stock, but whether you buy it early or not, who knows?
With all this building going on too, when we talk about infrastructure, that's a company that just comes to mind as a winner if that ends up happening. I know we've talked about like the U.S. Steels of the world, but when you look at who's underwriting these deals, that type of company, just like we've talked about maybe pet insurance companies with how many more people have gotten pets in the pandemic, this is another play on that with where the world's heading. If there's going to be a lot more building going on, there's a lot more risk with that.
Yeah, I mean, I think Lulu's probably.
Yeah, I mean, you got the insurance sector in general, you got to look at, I think, in a different way. There's so many different ends of insurance, and the big insurance companies reinsure to cut down their risk.
Well, I like the niches in insurance. That's what I'm getting at. When you talk about hazardous conditions specifically, where a company specializes in that, there's a lot of margins in that. That's why that industry is sexy to me.
So the show's over. Just to wrap it up here, quick update on what the market's doing. The US 30 Dow looks like it's going to open up 327 points. The S&P up 35 points, and tech up 99 points. Small cap up 23 points, which is over 1%. And the VIX is still pretty strong. People who follow the VIX and follow charts claim that for the market to be done really going up, the VIX needs to get down to 1750, which would be the final gap to be filled to the downside since the pandemic started. So keep an eye on the VIX. And everybody have a great day.
Rolland Market Mashup. Subscribe. Thank you.